What if I told you that the difference between struggling financially and becoming wealthy isn't luck, it's habits? The world's most successful investors follow a set of principles that make them money consistently. While others lose, they win again and again. These habits aren't secret, but most people ignore them, and by the time they realize their mistake, it's too late. But today, you won't make that mistake, because I'm about to show you 7 proven investment habits that separate the rich from the rest. If you master these, you won't just invest better, you'll build real, lasting wealth, just like the pros. Let's get started. Part 1. The power of early and automatic saving. Imagine waking up one day, checking your account, and realizing you've amassed a small fortune, all because you set up a simple system years ago. This isn't a dream, it's the reality for those who save early and automatically. By starting now, even with modest amounts, you harness the magic of compound interest. Think of it as planting a tree. The sooner you plant, the sooner it grows, providing shade and fruit for years to come. Automating your savings ensures consistency. It's like setting your financial growth on autopilot, eliminating the temptation to spend impulsively. Don't wait for the perfect time to start. Begin today, automate your contributions, and watch your wealth flourish over time. Part 2. Anticipate financial emergencies. Life is unpredictable. Unexpected expenses can derail your financial journey if you're unprepared. Effective investors expect financial emergencies and plan accordingly. They build an emergency fund, a safety net for life's surprises. It's not about if an emergency will happen, but when. Having funds set aside ensures you're ready for the unexpected. This fund provides peace of mind, allowing you to navigate crises without compromising your long-term investments. Start building your emergency fund today. Aim for 3 to 6 months' worth of expenses and keep it accessible for when life throws a curveball. Part 3. Set an asset allocation and diversify. Imagine putting all your eggs in one basket and then dropping it. A single mishap could spell disaster. The same goes for investing. Setting an asset allocation and diversifying your investments spread risk and enhance potential returns. Allocate your assets across stocks, bonds, and other investments based on your risk tolerance and goals. This strategy balances growth and security. Diversification ensures that if one investment underperforms, others can compensate, keeping your portfolio stable. Regularly review and adjust your allocations to stay aligned with your financial objectives. By diversifying, you're not just investing, you're building a resilient financial future. Part 4. Keep more of your money, the hidden cost of high fees. Picture this. You're filling up a jar with water, but there's a tiny hole at the bottom, slowly draining it away. Now imagine that hole is your investment fees, silently stealing your money year after year. Many investors lose thousands, even millions, to fees they barely notice. Even a 1% fee can shrink your wealth significantly over time. The best investors know this secret. Keep fees low. More of your money stays invested, growing for you, not for fund managers. Low-cost index funds and ETFs are the way to go. They offer diversification and strong returns without excessive costs. Before investing, always check expense ratios, transaction costs, and hidden fees, because every extra dollar lost to fees is a dollar that could have been working for you. Smart investing isn't just about picking the right assets. It's about avoiding the unnecessary costs that slow you down. Use an advisor wisely. Navigating the investment world can feel like sailing through uncharted waters. A knowledgeable advisor can be your compass, but it's crucial to use an advisor wisely. Seek professionals who act in your best interest, offering guidance tailored to your goals. An effective advisor educates and empowers you, helping you make informed decisions. They're not just managing your money, they're partnering in your financial journey. Ensure transparency in their fees and understand their investment philosophy. A good advisor aligns with your values and objectives. Remember, while advisors provide valuable insights, staying informed and engaged in your investments is essential. It's your financial future. Take an active role in shaping it. Part 6. Avoid emotional investing. Picture this. The market dips, panic sets in, and you sell off your investments in fear. Later, the market rebounds and you've locked in your losses. Emotional investing can sabotage your financial goals. Effective investors maintain discipline, making decisions based on strategy, not emotions. Markets fluctuate. It's their nature. Reacting impulsively to short-term movements can derail long-term plans. Develop a solid investment plan and stick to it, even during turbulent times. This discipline separates successful investors from the rest. By staying the course and avoiding emotional reactions, you position yourself for sustained financial growth. Part 7. Continuously educate yourself. The financial world is ever evolving. To stay ahead, commit to continuous education. Effective investors are lifelong learners, always seeking knowledge to inform their decisions. Read books, attend seminars, follow reputable financial news sources. The more you know, the better equipped you'll be to navigate the complexities of investing. Education empowers you to identify opportunities and avoid pitfalls. It's an investment in yourself that pays dividends throughout your life. By staying informed, you not only enhance your financial acumen, but also gain confidence in your investment choices. Remember, the best investors aren't necessarily the smartest, but the most informed and adaptable. Conclusion: embrace these habits for financial success. Adopting these 7 habits can transform your financial trajectory. Start early, plan for the unexpected, diversify, minimize fees, seek wise counsel, control emotions, and never stop learning. By integrating these practices, you're not just investing money, you're building a foundation for lasting wealth and security. Don't let this opportunity pass you by. Embrace these habits today and take control of your financial future. If you found this guide helpful, subscribe to our channel for more insights. Together, let's navigate the path to financial success.